Yeah.
Oh, I stopped it. Hey,
He's back.
I figured it out. It felt like for some reason, my brain froze. I was like, I don't remember how to turn the music off.
You just didn't want to.
I mean, I was jamming. I was vibing.
On with the weekend.
Heck yeah, man. Anyways, well, what's going on, Zach?
Man, working, living life. Got a sick kid over here, just doing the fun stuff, man. How about you?
Yeah, I know what that's like. Having a bunch of kiddos running around, man, with runny noses and the sniffles and stuff. You know, it's easy to get caught up in that, and those germs somehow find their way.
I know.
Right into your system as well. So I don't know. Luckily, I take vitamins, man. I'm pretty crazy with vitamins, and
Yeah.
I very rarely, knock on wood, get sick. So I don't know if it's from the vitamins, but I like to believe that it is. So Amber gets sick once in a while, but
yeah, I'll go once a year. That's my fix is once a year. Get it in, get it out. I'm good. But man, dude, I sweat. So like when I get sick and I'm actually getting over it finally, I'm just sweating nonstop. That's probably too much, but whatever.
Yeah, that's pretty crazy. Well, it's actually cooled down a little bit here. We're in December, starting to feel a little bit more like fall or winter or whatever. So I'm happy about that. I woke up this morning, I think it was like 60 something degrees in my bedroom, and I'm like, oh, this is perfect, you know?
Yeah.
It feels good. You don't want to get up from underneath the comforter, and you want to stay in bed when it's a little cooler. So I love that kind of weather.
Dude, it was funny. I was talking to a client yesterday complaining how it was going to be 41 degrees here. And he's like, do you know where I'm at? Go where? He said, Michigan.
Oh,
he goes,
God.
Flip those numbers around. It's 14 degrees here. So I was like, all right, I'll shut up now.
Yeah, anybody. I always say, like, anyone that's grown up in the weather, like the northern weather, like that, they're a different breed, man. Like, I have respect for those people, because I couldn't imagine like starting your day having to like shovel your driveway or like pick ice off of your windshield. Like, that is just crazy. I could not think of living like that.
And that's just to go out to get a coffee. That's not anything else.
Starting and then you still have to be on time for work.
Yeah.
So like you're hustling to try to get that stuff done, but you still got to be on time. There's no excuses, It's just crazy. We got it made down here. We do. Come join us, everybody. Yeah. Come on down to the Flow Rider. That's right. All right. Let's kick this episode off, man. We've got a really cool episode that we're doing, something a bit different, and we're going to change it up here. This is an episode that's really going to force everybody to stop and rethink some things about retirement. One of those being the age-old word pensions, right? So this episode is going to be around pensions, and mainly because there's a recent story that's been circulating around about a senior citizen named Ed Bambas, an 88-year-old Army veteran and former General Motors employee who's just as of like last week was still working as a grocery store cashier just to make ends meet. And so Ed believed ultimately that he had done everything right. He served his country, he paid his dues, and he worked for decades at a reputable manufacturer like General Motors. And he retired thinking that his pension would ultimately take care of him and his wife until it didn't. So we're going to roll a clip to share Ed's story with our audience if you're not familiar with it. And then this episode's going to be around that. So go ahead and roll it.
Right. Just seeing if I could have help scanning this. Thank you. What was your name?
Ed.
I'm Sam.
Okay.
I actually had someone nominate you from this store and said you're very hardworking.
Well, I tried.
May I ask how old you are?
I'm 88.
And still working?
Yes, I have to.
Why do you to keep working?
Retired from General Motors in '99. In 2012, they went bankrupt and they took my pension away from me.
Oh my gosh. Do you have a wife?
She passed away 7 years ago.
7 years ago.
She was sick when I lost my pension.
So you've been struggling a bit?
A little bit.
You said that you lost your pension?
Yes, sir, I did. I was in the Army back in 66.
So you're a veteran too?
Yes. The thing that hurt me the most was my wife was real sick. And they, when they took the pension, they also took the health care coverage
Yeah.
and all but $10,000 of my life insurance.
Oh my God.
So I sold the house, sold property I had, and we made it through. My wife died 7 years ago. Since then, I've been trying to reestablish myself.
And you're working here how many days a week?
I work 5 days a week, 8 hours a day.
And you do that because you have to? Or
Yeah, I don't have enough income
what's your dream?
to live somewhat the life I was hoping for.
Like to share your story and try and, get people to help you retire?
Oh, thank you.
Of course. You're amazing. I want to give you $400 here as a tip. Of course. You're amazing, man. Of course.
I don't know what to say. This goes a long way to help me.
Give you a hug?
Yeah, thank you so much.
So let me change the audio here and stop sharing the screen. But what this doesn't give the full picture of is what happened afterwards is remarkable and just showing the good of what people are capable of. So what happened after this is this social media influencer then went in and created a GoFundMe account, which ended up raising over $1.7 million. So just people out of the generosity and kindness of their heart donated to the point at which it raised 1.7 million, which was all provided to Ed for his retirement. And a very fortunate scenario. And the story itself is just, it's brutal to listen to. It's hard.
Yeah, that video, when I saw it last week, it came up on my social media or whatever. It was hard. It was hard to keep the tears back on that one.
Yeah, it's just crazy. You think about it, and you think about our loved ones, and you think about your grandparents, and like the last thing you want for them to have to do is be doing things like that and working at 88 years old. You got to think he's 88. Now, don't get me wrong. If he wants to work, if he loves what he does, great. That's awesome. But is this a choice he's making? In this case, it's not.
Yeah, and there's a huge difference between, wanting to and having to.
Right.
And the fact that he was forced and, to come out of retirement and go back to work, that's just wrong. And nobody should have to do that, especially if you paid your dues,
Yeah.
And that's the thing that's like so heart-wrenching is, this gentleman, you can tell he's a good dude, right? And like this gentleman was loyal to GM, paid his dues and worked there for many, many years to do what, to earn what many people hope for. And that's to have that pension so that, those paychecks keep coming in when you hang the gloves up. And unfortunately, what we find is that not always are these pensions what we believe them to be. They do have a way of failing. And it's sad to imagine anybody being forced to go back to work at that age.
Yeah, and it's not a situation in which he was ignoring his planning or living financially reckless by any means. In his situation, he was following the traditional retirement blueprint and still found himself in a vulnerable position.
Yeah, so ultimately after GM's bankruptcy and restructuring, and Ed's pension ultimately changing and going away, the income that he thought was guaranteed no longer was enough. It was no longer there to cover those basic expenses. And again, he was forced at 88 years old to go back and survive, right? Like he had to work to survive.
Yeah.
And that's just so sad.
Yeah. Now, obviously, this one ends on a positive note and eventually heartwarming, and just due to the public generosity. The reality is, the rest of us out here, the retirees don't get a second chance like that. This is a one-off instance that he was fortunate to be a part of, but that doesn't happen to everybody else.
Yeah, exactly. And that's really why this conversation and this episode matters. Today we're going to talk about why pensions aren't as guaranteed as people think, and why the risk often goes unnoticed for years, and what retirees can do to protect themselves from relying on income they don't truly control.
That's right. So let's start with some context, right? So for a long time, pensions were really the backbone of retirement in the country, right? So the idea was simple. Give decades of service to an employer, and in return, they give you a paycheck for life.
And that model worked flawlessly, really, in a different era.
Yeah, exactly. So pensions were designed when people were retired earlier, lived shorter lives, and when companies weren't dealing with the same global competition of financial pressure they face today. So fast forward to now, and many of those assumptions are no longer hold.
The biggest issue is this: a pension is only as strong as the entity backing it. And corporate pensions rely on the long-term health of the company, proper funding over decades, and accurate life expectancy assumptions. And when any of those fall apart, the pension becomes a liability.
That's right. And when companies run into trouble, pensions are often one of the first things that get adjusted, whether that's frozen, reduced, or transferred. So from the company's perspective, it's a balance sheet decision. And from the retiree's perspective, it's their livelihood.
And that's really the disconnect: is retirees think that they own a guarantee when in reality they own a promise.
And as we've seen in this situation, promises can change. So looking at another aspect of this, one of the most dangerous things about the pension risk is how quiet it is, right? So if your 401k drops, you see it immediately. We know exactly what's happening. We can log in to our 401k website. We can take a look and see what's happening to our account value. If interest rates move, and it's all over the news. But pension risk doesn't flash warning signs in the same capacity.
And most pension statements still look reassuring year after year. Payments arrive on time, everything feels stable until it doesn't.
And by the time retirees realize something's wrong, well, their ability to respond is extremely limited. So they're no longer working, and especially in this case, they can't rewind that time, and they can't easily replace lost income.
And that's why pensions create a false sense of security. People build their entire retirement plan around a single income source that they don't actually control.
Yeah, it's like living in a house with a foundation issue that we can't see, right? So here we are in Florida, of all places, where we see sinkholes, right? So these things don't pop up until all of a sudden the bottom falls out, quite literally. Everything looks fine until the cracks start showing up. And when they do, repair options are limited and very expensive.
That's crazy. Yeah, sinkholes are frightening. I think about those. For some reason, like Pasco County always had
All the time.
tons of them.
Do you guys ever get them by you?
Not over here. You never hear about it.
No?
No, I've never heard of a sinkhole on the East Coast.
Yeah, we've got one maybe 15 miles from us that just popped up at the middle of an intersection.
It's insane, dude.
Yeah.
So let's talk about, owning your income, right? And why that control matters. This is where we think the conversation ultimately needs to shift from what promises do I have to what income do I personally control.
That's right. And that's where annuities can play an important role when used correctly. So we often describe annuities as a way to create a personal pension. One of those isn't tied to your employer or subject to corporate restructuring.
Yeah, so with an annuity, the contract is between you and the issuing insurance company. So ultimately, you choose the carrier, the
Bingo.
structure. I'm sorry.
Oh, I said bingo. Yeah.
Sorry. You choose the carrier, the structure, the guarantees, and how and when income begins. So that's actually part of our entire framework within Annuity Association. Is we take you through our multi-point annuity inspection process, which will unveil the curtain to not only the annuity marketplace, but to also show you how to truly evaluate all of these areas. So we look at the carrier. Yesterday I spent about an hour working with a gentleman who was very conservative and wanted to make sure that these carriers were financially stable. And he wanted to look beyond the rating, beyond the AM Best financial rating. So we have the tools to do that. So we went in and looked at basically a financial overview of multiple carriers so that he could assess, their health overall. And we looked at their investment portfolio, what their assets are, how long they've been around, if they have any assets that are non-performing. Like, we looked at everything. So that's really what we ultimately want to do is give you the education and the tools to feel empowered to make the right decision for your unique situation. And so looking at the carriers, one of those areas that we do, the structures of the income guarantees, and ultimately how and how much income and when it begins.
That's right. Yeah. So the ownership, right? So part of what we do every day is providing, like you said, empowering and I would say control to making that decision. So that ownership is a big deal, and you can choose which carrier we're selecting. We can evaluate them and do that in an unbiased way. So you're no longer relying on a promise made decades ago by companies that you no longer work for. This is a decision that you can make objectively on your own.
Yeah, and that's exactly it. And I know that there's some people that might hear this and then say, well, what if the insurance company, goes out of business? What if they fail? Well, go ahead and Google search it and see when the last time that's happened. It's very, 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 very rare, way more rare than these pension failures. In addition to that, there are state protections in place that cover fixed annuities and income annuities up to certain coverage limits. So it's similar to how the FDIC covers banks. The state insurance guarantee associations cover annuities. And so if you ultimately want to get strategic in mitigating, carrier risk, carrier stability risk long-term, there are ways that we can look at multiple annuity contracts from different carriers and formulate a strategy that would allow you to be under the state insurance guarantee limits, so that each annuity contract by each carrier is under that limit. So if that carrier goes belly up or what have you, and they fail to continue making their income payments, you're covered. Then the state would make you whole again. So that's what we do for clients looking at larger case sizes. Anything above 400,000 or 500,000. We've done multiple structures like that where someone was doing millions, a couple $1,000,000 in annuities, and they wanted to be under those limits. So we just had multiple contracts, and that's okay. That's what we want to do, is give you the tools and the framework to build the right structure for your income guarantee. And if that means customizing the plan to mitigate carrier risk, that's what we're going to do.
That's right. That just centers around that intentional planning, right? Creating some clarity, and especially in retirement where it matters most.
Yeah. So there's multiple types of annuities out there. All of them offer some level of guarantee. MIGAs, for example, can offer predictable contract-based growth, fixed rates of interest every year for the duration of the contract. And then also income annuities, right? They can provide lifetime income guarantees regardless of how long you live or what markets end up doing.
Yeah, exactly. So bringing this back to Ed's story and talking about the real takeaways that we've got from this lesson one, just never assuming that that income source is completely untouchable, right? So the value that we have with these annuities is we can evaluate. We can use our resources to make a decision.
Yep. Especially income that you don't personally own or control. It definitely needs to, more thought needs to be given on that premise, right? Like you don't actually own or control it.
Yeah.
And if you don't own or control it, you haven't really no options if it doesn't work for you anymore.
Exactly. And lesson two is that diversification isn't just about investments. It's also about income streams, like you had mentioned in this strategy of using more than one carrier.
Yeah, and I love that idea. It's like, why not? Why not
Yeah.
do that? It makes so much sense. Lesson three is at least one income source in retirement should be contractually guaranteed, predictable, and not dependent on an employer's future decisions.
That's right. Because ultimately, when we're retiring, that employment paycheck, that uncertainty that may come with it hits that much harder.
Yeah, so when it comes down to Mr. Ed Bambas here, our guest on the show today, his story ended well, but most retirees won't get a viral rescue like Ed did. They get one opportunity to make the right decision on their retirement plan, and ultimately build an income that they can rely on. So that's where it takes some due diligence, right, to research all of your options.
That's right. And as with every episode that we put out here, this is about being aware, having awareness of what your options are and knowing that you have options. Oftentimes with these pensions, you have the choice of a lump sum or that income benefit. So just knowing your options and evaluating those, understanding where the income sources come from, who controls it, how durable it really is.
Yeah, the gentleman that I'm working with, that I mentioned, we did the financial overview. He actually has two pensions, and we also shopped those to see if we could get him a better deal. And guess what? I mean, we can't. The income was one of them was gonna improve his income each year. If he rolled the pension into an income annuity, the income annuity was going to pay a higher income amount. I think it was like, it wasn't a crazy number, but it was like 2,000 a year.
Yeah.
So, maybe $200 a month. That's someone's cable bill or,
Oh, yeah.
whatever. So like, why not? The way I look at it, if you can get more income, also maintain control over the asset because you own the annuity, you own the asset, and you have options and flexibility as you age and move forward, you can do different things with that annuity that you could never do with a pension. A pension is an annuitized product. You relinquish full control over the lump sum asset once you turn on the income. With an annuity, most of the annuities today that we work with allow you to maintain control of your assets. So that lump sum doesn't disappear once you turn on income. It stays in your account in the annuity, and you have liquidity there. If you want to access it, you can access up to 10% a year with no penalty. If you pass away, that money that's left in that account passes on to your designated beneficiaries in the contract. If after the original surrender period, which is generally 10 years, if you decide that you want to walk away, forego that income and take that money out and go do something else with it, well, maybe you got a better investment opportunity, want to buy a house or whatever it might be, you can do that. So like you have all these other options and all of this flexibility as you move through retirement in the annuity that you would never have in the pension. So like if you have a pension, you should be seeing what else you can get out there on the income annuity marketplace. You might find that you can get more income and all these aforementioned benefits that just make it really a no-brainer.
Yeah. Yeah. Obviously, this this viral story struck a chord with us just because of, I think, what we do and the nature of how we do it, and just knowing and hating to see a situation like this happen. It was something that jumped out and just said, hey, we got to get this out there and show how it can correlate and how somebody might be able to fix a situation or improve upon a situation that they currently have.
Yeah, exactly. So if you want to compare your pension options and see what they could do in an annuity, we would love the opportunity to serve you. If we can't put you in a better position, we'll be the first to tell you. I could argue still that even if you get a little bit less income with the annuity, which I doubt would happen, but if it did happen, I still think the other benefits far outweigh that trade-off, right? So I would be willing to give up maybe $1,000 or $2,000 a year to know that I have my pension, or I'm sorry, the lump sum accessible as I age, you know,
That's
and
that
that
key word. That's that flexibility.
yeah,
You have a choice.
right. And you earn that money. Why not have access to it? You should. Pensions are a ripoff, man. I'm just being honest with you. Like, compared to what the benefits are in an annuity, it's a no-brainer. So we'd love the opportunity to earn your business. We would love the opportunity to educate you more. If you are interested in doing that, to find us and meet with us, we serve clients in all 50 states. You can do so by clicking on the link somewhere on this video in the show notes here, and that'll connect you with one of our advisors. Maybe you're not ready to just meet yet, but you want to get a free report. That would be the first place to start. We offer the most transparent report in the industry. It'll show you income payout rates, carrier ratings, the fees associated with the annuity, so on and so forth. We're really proud of that. So if you want to start the relationship there, that would be fine. There will be another link to request your free annuity report. You can put your pension lump sum in there. We'll kick out the report and how much income that would generate if you moved it to an annuity. So I hope everybody got some value from this. We appreciate everybody tuning in. We're really humbled to be a part of this platform, to help us, really meet our mission of bringing more transparency and education to this antiquated industry, which is the annuity industry. So with that being said, anything else I missed there, Zach?
That is it. Got to do our signature sign off and we're good to go.
Yeah, man, let's do it. I'm Jeremiah Concher.
And I'm Zach Van Ness, and we are
the
Annuity
Dudes. Signing off.
I thought you were going to forget it.
Nah, man.
Dang.